Hey guys, it's middle of January now, 15th. It's Saturday. That usually means I get some downtime and I get to just browse the internet a little bit and try to find something interesting to just think about and usually investing related. So today we're going to be taking a look at some 2023 predictions. I think it's still early enough in the year that it's still relevant. So let's take a look. So today we're looking at some visual report that's based on, well, according to what they say, analyzed 500 plus articles, reports, podcasts, and interviews on the internet. So largely sentiment data. And these predictions, of course, they're not 100% accurate. You should know that. But, you know, the statistics show that when you just hold up a jar of like many beans inside, and you just ask random people how many beans they think there are in the jar, when you just ask a small sample, like 10 people, they like really get it wrong. Some people say 200, some people say like 5,000. Like they have no clue how to estimate. But the more people you ask that question, the more accurate you get, and that's just true. That's just statistics. So there is a value in asking a lot of people and listening to their opinions. So collectively, we can be quite smart and we can really predict the future. So just to quickly go over, it's my first time looking at this visualization. Blue is general economy, technology is yellow, markets is green. I'm talking about prices of things, I guess. Geopolitics is red, and everything else is purple. And the more dots you have means more predictions, so probably more accurate. So let's go from the top to bottom, and I'll just quickly give my comments, and I would be interested to hear what you guys think about this. So first of all, technology. Regulators will clamp down on TikTok and other tech companies. I'm guessing it has to do with the content. I'm not too sure. I haven't been following up with TikTok, but probably the sort of content, probably not like cookies or privacy issues. Let me know. I'm not too sure, but generally clamping down more on these things, I guess. I think they should do that, in my opinion. I mean, we had a period of like rampant like freedom, but let's tighten a little bit, and then if we tighten too much, then we can. It's like a pendulum, right? So we can get back to being loosened up again. But okay, so next, everything else. 5 dots. Energy will remain expensive. Yeah, that's unfortunate. I think the same way too. It will remain, not necessarily go up in price, because I do think I've read some reports about inflation coming down a little bit, at least in US. I pay more attention to US even though I live in UK, because US just generally has more impact on global economy. So I do think it makes sense for the energy to remain expensive for the time being. And then let's look at market. Broad equity indices will rise. Well, that's surprising. So this is like various different indices. Broad equity, broad really means like we're talking about like hundreds of stocks in this indices. So something like S&P 500, that's just one of them. But that just means overall the stock market will go up in value in terms of price. But a rising tide won't lift all boats. But it's just got 4 dots. That's about it. So it's not that strong. So we're still not sure. So we can safely assume this is not really reliable. I mean, stock markets notoriously known for not being reliable from experts' predictions even. So we can just ignore that. Technology, Google stranglehold on search will loosen. Yeah, well, AI is coming, right? So watch out, Google. You gotta step up the game. European unity will be tested. Geopolitics. I think there's Sweden and Finland, is it, or something like that, trying to join NATO right now, but having a hard time. People thought it was gonna be breeze, but I don't know. I haven't heard the good news yet. So they must be like facing some hurdles. I don't know the details, but so it's kind of funny, right? Because Russians attacked Europe, and the one thing that Russia doesn't like happening is European countries bonding together. But like more countries trying to join the NATO. That's interesting. That worked against their favor. So we'll see what happens. Green is markets. The value will trump hypergrowth. Definitely. I mean, a lot of people are saying that recession is coming, which means all the hype is gone, party's over, all the speculative investors are done with their gambling. So it's more about a lot of people are going to try to catch the bottom, right? Definitely. And these are the contrarians. These are the people who have diamond hands. So these are the people who are trying to catch the falling knife. Um, and so more value oriented people. People who don't mind the market going against them because they believe in the value, right? So a lot of thoughts for that one. I agree. Times are tough. Value investors will step in. So geopolitics, 5 thoughts. China will maintain its aggressive stance, but no Taiwan invasion. That's understandable because China went through recently like a big economic hit with the COVID, and they had a lot of trouble internally, domestically. Like citizens weren't happy with the government's lockdown, and whatever the reasons they might have, the government might have for locking people down, they weren't happy. There's a lot of things that they have to sort out internally. So I don't think there's going to be invasion as well. So, and then this has got a lot of dots. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that's understandable because a lot of people recently have started talking about ChatGPT, and because it came out in November, right? So there was probably a lot of spike in number of articles and a lot of podcasts talking about this, and AI is going to be everywhere. And I certainly agree. I completely agree. I'm gonna do another video after this one. I'll probably upload 2 videos today, but I'm gonna talk about AI and what I think about it. So China economy will bounce back after reopening. There you go. So that's the economy. There's 7 dots, so that's pretty strong. I agree. China's opening up again. The lockdown is easing up. With the lockdown, a lot of the bubble has gone away from the Chinese economy, and in a way, I'm not gonna speak about it. I have to do more research on China. So definitely they're gonna stop the lockdowns and things are gonna reopen. Hopefully China comes back. Right now there's 2 global economic powerhouse, right? U.S. and China. So if China gets better, we also benefit. People in the West. The U.S. dollar surge has come to an end. Yeah, that makes sense, right? So everybody flocked towards U.S. dollars because it's a safe haven, but when something's overpriced like that, when you look at the index for US dollars, it just spikes up. Once something moves like that in price, it's not sustainable at that kind of a spike. So it will come down. I wonder what people are gonna do with selling off US dollars. So there's less demand, so less people are buying. And then I wonder where the investment is going to go from US dollars. Probably because all the interest rates are going up. Maybe other currencies are attractive as well. Maybe. I don't think it's going to go. Maybe it's tied to the equities rising up again. I'm not too sure. This is really just like economy is really so big that I can't make these predictions really, but we'll see what happens. The outlook is positive for emerging markets and their currencies. Really, and that's markets. That's so they're mainly talking about the prices of the emerging markets and their currencies going up. So their stock market indices and their fiat currencies. There's 7 dots on this, especially commodities exporters. Okay, so the countries that are exporting commodities. I know that what's that country in north of South America that found oil and they experienced like 3x of their GDP or something because they started exporting oil ever since Russian sanctions happened. Guyana, like Guyanese nation, something like that. And then I know that there's another African country that exports oil that benefit a lot. So there's gonna be like these emerging countries that are gonna take this opportunity and just really just export a lot. And I think that's what this means. Makes total sense. When poor country exports like that, there's usually opportunities in selling used cars. So if you want to go abroad and get used cars, a couple years old from I don't know UK or America, and then sell them there, that'd be a good business. If you do that, you probably want to start with stick to the Asian cars, the budget cars, and fuel efficient cars. So bonds are back, baby. Yeah, that's tied to the interest rates, right? So usually the sign of the recession is when the bond yield curve crosses. So when interest rates go up, that usually means economic contraction. So you start raising the interest rates from the short-term bonds, like the bonds that expire in the shorter term. So when the yields of the shorter term, because the interest rates going up, their yield curve will rise, and then your existing old long-term bonds, their yield curve is still flat, so it's going to cross upwards, and that's a sign of a recession. So bonds will be more attractive. It's good for me because, as you know, I do a lot of bond investing for fixed income. I don't do any stocks or anything like that. I only do dividend-paying bonds, mostly triple B. So that's a good news for me. Global recession risk is high. What is that? That's economy. How many dots are there? 9. That's very strong. That's one of the most dots I've seen. Like there's 10 here, right? So, but the US may narrowly avoid it. Yeah, well, we knew recession was coming, right? It's bitter, but so many people are saying they've been saying about it for many years. Warren Buffett was saying it for like 3 years. He's been stacking up cash, so it's gonna happen, I think. We see that with a lot of companies laying off people. A lot of these are smart people and they're preparing for recession. When we weren't so wise, when we didn't have like this advanced internet and data sharing analytics before all this, when this wasn't the norm, one of the I don't know too much about the Western history, but like when I was growing up in Korea, Japan, Japan's lost almost 2 decades. Their economy it just crushed during the 90s. It took them 2 decades to come back to that point again. And that just goes to tell you that people, these surprises that we get, even 2008 real estate market crash and all that. I have a feeling that a lot of that is going to be a thing of the past, because I think people are just in general getting better and better at predicting and what's going to happen. And then they better prepare themselves. So all these big companies laying off, it's really sad to see that, but it's also them preparing for economic downturn. And companies didn't do that during those times when things crashed. They took on more leverage, they took on more loans to expand their business, thinking that this is going to go on forever. And look what happened. But now the companies are tightening. They've smartened up, right? So that's something unique about the current situation. The Russian-Ukrainian war will not end in 2023. Yeah, so like it's really fierce what's happening. Like the Western news is not covering it, not so much anymore. But I know that in the eastern end of Ukraine, there's a lot of battle that's happening. Even I forget the name of that city, but it's even got a nickname called Meat Grinder. There's thousands and thousands of Russians and Ukrainians fighting for that one particular strategic city. It's just the southeast of the capital city, Kiev. Yeah, it's very strategic. So, yeah. And, of course, the Ukrainian president recently got a new deal, arms deal with the America, sending more support in terms of weapons and armored vehicles and stuff. The crypto winter will continue. Only 5 dots. I think so. That's not a surprise to me. The crypto winter usually goes for a couple years or so. But I am, in fact, going into crypto now because it's so low. I have been putting in £100 every single month. Not with my own money, but with my employer's money. My employer gives me £100 per month to spend anywhere I want, and it just kind of refreshes, so I have to go out and spend it. So the first of every month, I just go and buy Ethereum. That's it, and I'm just like, seeing what happens. So far, it's done like 20% upwards. Work culture will continue to bend towards flexibility. That's a good news. That's amazing. I would love to see that, but that's only 3 dots, so I'm not going to too much weight on it. Tension will grow between citizens and governments, particularly in authoritarian countries. Yep, a lot of political vacuums happening, and a lot of tension. Following Elon, Silicon Valley will slash headcount and costs. Yeah, this goes along with the recession, right? Again, companies are smartening up. This is I don't know if it's a good sign. Let me know what you guys think. But you can't expect the economy to just be good forever, like continuously. That's just not realistic, right? People become greedy. People take on more loans to try to expand, outcompete the competitor, and then once the leverage becomes so big, you've expanded too much, and then the contraction will have to happen, right? You've taken more than you can bite, right? So that's, you can just think of it as like right now is that phase. So hopefully in the future, I don't know, these corporations will always be too greedy. So I mean, I think the contractions will always be like really detrimental, and it's going to have a lot of impact on people. Education will face disruption from various angles. AI, right? Three dots. Nothing to worry about. Real global GDP growth will be in the 1.5% to 2% range, with high variance between nations. Again, when there's a lot of disruptions happening in global economy, global like geopolitical issues popping up, there's going to be a lot of opportunities. So this variance is going to be great. We talked about that with the oil countries. So there could be a lot of opportunities, to be honest, if you just open your eyes and try to take on risks. If you go overseas and do some business. Interest rates will peak in 2023, and that is 7 dots, and seems like a good news. We'll see. But just peaking in 2023 doesn't really mean anything, right? It will have to calm down, but will it just like peak and stay there? Because that's just painful, right? India will have a strong year. I have no clue what India is doing. I think I'm gonna dig into that. And if there's opportunities, maybe you can buy CFD. There could be. I mean, it will be too much work for Westerners like me to open up a trading account in India. Too much hassle. So I'll probably look for some broker in UK that allows me to trade CFD of Indian stock market index. So like top, I don't know what kind of index they have, like top 300 Indian companies. So that would be interesting. But I'll dig into that. Maybe I'll do a video on that. Do some more research. Inflation will begin to cool off, but will remain well above target levels. So target level, we know that's 2%, right? And inflation will begin to cool off. That's already happening in US. I am monitoring US inflation, but it's too early to say that it's coming down, because it just barely has passed the peak and it's coming down. You really need that momentum and just drop, but it's still like just near the peak. So it's too early to say anything. But it's nice to see that there's 6 dots of inflation coming down. All that interest rate hikes, everybody's suffering because of it. I know that especially the low-income families suffered a lot, and I think it's paying off if the inflation is coming down. I think a lot of people should learn from the lessons, and when times are good, especially if they are low-income families, I hope they don't expend too much their expenses, like move to a bigger and better rental house, buying a better car. Like you really need to hold off a bit on that and just keep the expenses low. Because like if the expenses are high, like when economy just becomes a little bit bad, you just get the biggest hit, because low income just means you can't come back from it. More big retail, these are 2 dots, so I'm just going to quickly read and just ignore. More big retail brands will launch recycling programs. Okay, more manufacturing will shift away from China. Yeah, that's like, we'll have to see. It's crazy how much manufacturing happens in China, and all of that gets shipped to the West, because all the Western consumers like to buy all those products. So I doubt that. It's unlikely. There has to be some other options other than China, but I don't see anything remotely close to the scale of Chinese manufacturing. So yeah, so I think just to wrap it up, the biggest takeaway is AI. I'm really looking forward to making the video of this right away after this. And then emerging markets, there seems to be a lot of opportunities coming up with emerging markets. There could be a lot of cool business ideas if you don't mind flying over there and build some risky relationships with the locals. And yeah, and then I think that's it. So let me know what you guys think. I would be interested to hear what you guys think on some of these topics, and let's see how it plays out. I'll do the Indian economy research. I'm really curious about that.